Thank you for tuning back in. I see you're passionate about your future, so we're going to dive right into it. So I use two main strategies, only two. The first one is support and resistance. That's my first strategy. A lot of people know support and resistance, obviously. That's basic fundamentals. But I do mark up my support and resistance a lot different than most traders. So that setup doesn't present itself every day. So it's kind of rare, but not really. Like I get it, but not as much as supply and demand, which is my main strategy. That's what I go with every day. That's what I'm looking for. I take supply and demand over support and resistance every day. It shows itself every day, and it's just a high win percentage, especially the way I take it. So with any strategy that you do choose to use, obviously you got to go through the fundamentals. And one of those fundamentals that you should start off with is obviously key levels, because that's going to play a major part in your trading, right? You have to know what areas are important to trade off of them. Without knowing the key areas, you're just blindly getting into setups, right? Especially with the way we trade, which is pure price action, no indicators or stochastics, ROSIs, or anything like that, right? We're just pure price action. So you have to know these key levels. So this video is going over how I mark up my key levels to know which areas is important and where I should be trading off of. So this was a few days ago. Obviously we didn't trade NFP Friday. So this was Wednesday, right? I actually sent these trades to my Instagram and Discord. So the people that's on those platforms following me actually saw these trades, the ones I'm gonna go over with you. So real quick, I come to the market, right? It's my session and this is what I see. You already know I'm on the 15-minute chart looking for my 15-minute supply and demand setup. And then we're going to scale down to the 5-minute to get a sniper entry on the break of the candle for a 1-to-1, right? Move our stop loss to break even and then hold the trade to the 15-minute 1-to-1, which should be your 1-to-2, whatever it is, right? We're not being greedy, but then we're getting out of the trade, right? But the first thing to know is the key levels. So what I like to do when I'm actually looking for my key levels is knowing what I'm looking for. So if you look right here, right, this last bearish candle, right, this last red candle pushes down, this green candle breaks up, and look at this aggressive push up. So we have to understand what supply and demand is, right? So supply is aggressive selling, which you can notice that anywhere right here. Supply, right? Aggressive selling. Look how strong these red candles are. Aggressive selling, that's supply. Demand is aggressive buying, right? So aggressive buying and aggressive selling could be 2 candles. It can be 3, 4 candles. You never really know. You just have to be able to recognize it when you see it. So right here is demand, right? Look at this strong push up. It breaks structure as well to the upside. And this next candle, this next red candle, it pulls back a little bit, but it never comes back and touches that last red candle, right? This one right here. So the rule that I like to say, because not only do I take supply and demand setups, but I take high probability setups. So supply and demand is a high win percentage in itself, but once you tie it with gaps in the market and high probability setups, I mean, it's to the moon. You know what I mean? So we have to understand gaps in the market as well. So what I would do right here is mark up the top of this last red candle to the bottom. And then, of course, I would set an alert at the top right here. And that'll be my demand, right? This right here is my demand. What I like to say as a rule, right? If the candle after the move never pulls back to the candle before the move, then that's the gap. So one thing about the gap in the market, right? One thing about high probability setups, the gap has to be where the move started, right? So check this out. If the candle after the move the move will always be the candle that breaks the box when you draw it. So the move is this big green aggressive candle, right? That's the move. So if the candle after the move, which is this one, if it doesn't pull back to the candle before the move, right? This one right here, the candle that created the move, right? When you draw the box, if it never pulls back to the top of that box, then that is the gap in the market. So if we going off that rule, off that saying, right, that I just came up for you guys, then this is the gap in the market right here. And you see how that gap in the market, right? Let's delete these and clean this up for you. You see how this gap in the market, this top green box, is right on top of our move, our actual setup. So that's what we love. What that means is they didn't let all of the traders in. Everybody didn't get in right here. It's going to come back in, fill this in to let everybody inside of the trade and then take off in our favor. That's what we know. So a good indication of a gap in the market is knowing where the market wants to head. So right there helps our trading immensely, right? So right now, let's run through this trade and see what happens, right? Okay, boom, right? And then a wick. So right there, it fills the gap, right? This wick comes down into our box, right? It can come down here and come down here as long as it doesn't break this box. Once it breaks your box, the setup is invalid, right? But it wicks up, it touches our box, fills the gap, and then wicks up, right? And you already know that we are scaling down to the 5 minute, and then we are taking our entry, and then it's to the moon from there. You see what happened? I mean, that is just beautiful. And just real quick, I mean, this was in our last video, so we're not going to touch on this too much. I'm going to go over this in more videos anyway. But real quick, I mean, that's just no drawdown. I mean, TP smash, sniper entry. That's just beautiful. You know what I mean? You can't ask for more. So knowing these key areas is really important. So I wanted you to start off with this setup just because the key area was so like evident, right? Everybody who uses this supply and demand, it's different forms and variations you can use it, but this was just clear as day, right? This is just a textbook trade. 15 million people got in right here, right? TP smack. This was just a textbook setup right here. So I wanted you to start off with this one so you can actually see it clearly, right? Goes down, takes off, never pulls back, so everybody didn't get in, comes back, fills the gap, takes off to everybody's favor. So that's our main strategy, supply and demand. Let's get to the next setup and see exactly how we draw that one up. Okay, this is our next setup, Euro Swiss, right? 15-minute chart, obviously. That's what I'm looking for my setup on first, which is supply and demand. That is our strategy. That's what I'm looking for every day, all day, right? So I come to the market. This is the same day, the 30th. So I took this trade as well and sent it to my other platforms as well. So I come to the market and this is what I see, right? So we know that supply and demand, supply is aggressive selling and demand is aggressive buying, right? So if you look, and we're not doing anything to the chart, we're not manipulating it in any way. We're going to the 15-minute chart and we're looking at it and we're reading what price is telling us. So the last red candle, this big, I mean, aggressive engulfing green candle, and then it never comes back. So you know that this is a demand area, right? So you can go ahead and mark this up. And what we're using is the last candle that is the opposite. And you'll see what I mean. So this demand is a 15-minute demand. Gotta know that. And what else do we see? Right here, supply, aggressive selling. I told you guys that supply could happen, demand could happen in 2 candles. It doesn't matter. So this last green candle, right, we're using the last candle of the opposite that it does. So this is a supply, so we're using the last up candle. Big engulfing aggressive red candle, and it never pulls back, right? Never pulls back. It even breaks structure, right? You see this support right here, the support, it breaks through that. So you can mark that up as well. And what this is telling us is that we have some gaps in the market that is going to have to balance out. Because what you have to understand is the market will always balance itself out. So more than likely, whatever price hits first is going to go towards or to the next zone. So we're just sitting here patiently waiting. I would even set an alert right here or right here, because I trade multiple pairs, obviously. So if I'm not looking at it, I want to be alerted that it's hitting my zone, so I don't have to just sit there fixated on this pair and watching it move. Anyway, we're waiting to see what price does. So let's see what price wants to do, right? Let's wait right here. Now this is a golden nugget, right? This is going to help a lot of traders. Some people will tell you to take this. It comes up to our zone. It's a little bit away. Yeah, it's not that much. It breaks below, so it must have broke on the 5 minute. We should be in this. No, sir. No, ma'am. Absolutely not. We're not doing that. We have an alert right here. This is the gap we're waiting on it to fill. It must fill this whole gap. Don't get caught trying to get in early just because now it's going in your way and you think you missed a trade. Let me let you know what that's called. FOMO, fear of missing out. Don't get caught in this. You might have won on a 5 minute, maybe even a 15, but it's a bad habit, and that's something we don't want to start. So we wait. We're waiting until price fills that gap. So let's continue to watch. Let's continue to watch. Coming back, fills the gap. Perfect. That's us, the disciplined traders. We're waiting on this. Touches our box on the 15 minute, which means it fills that gap. More traders are getting in. It hasn't broke yet. You see what happens. Real quick, if you don't know, if you need to see it. This is a 5 minute demand. You can hold to the zone, liquidity. It's all up to you, but 1-to-1 definitely gets smacked. No drawdown. And you see it's just to the moon. It gets like that. This is how powerful supply and demand is. And you see it throws you an entry on the demand as well. So zone to zone. This right here is golden, man. I really hope you're taking notes. If you liking what I'm going over, if you getting it, just please comment, like, subscribe, share. I'm trying to help a lot of people out with this information. I'm letting you know right now, a lot of people is not going over this, not going over it. So this is just a beautiful trade. 1 to 5, that could change your life, obviously. No drawdown as well. It's just a beautiful setup. So that's exactly how I draw my zones. Go back to the 15 minute. You will see here, last green candle breaks out. If the candle after the move is the candle that breaks the box. So this red candle, if the candle after the move never pulls back to the candle before the move, which is our box, right? Then that's the gap. So this is the gap that the market had left. And it came up, tried to get those rookies in, right? Try to get those rookies in, and then it actually filled that gap and went in our favor. This stuff is powerful right here. So I really hope you're taking notes. If you're loving what I'm going over, smash that like button. Let's get to that next setup. Okay, so we're on our last setup. EuroCAD 15-minute chart, always. We're looking for our setup. This setup, I want to show you guys something a little different so you know and can see the difference in our setups and how other people, how other traders, most traders take supply and demand. Obviously, we take high probability supply and demand. So with a gap attached, right, that's already one confluence letting us know where the market wants to come back to, let everybody in, and where it wants to go to. But obviously, every setup, every supply and demand isn't like that. So the other people take the regular supply and demand. Now, with that being said, I'm not saying you're going to lose. I'm not saying it doesn't work. But what I am saying is it's a lower win percentage for sure. And honestly, it's just too many ifs and maybes when it comes back to that zone. And I'll explain why in just a second. So we're here on the same day, November 30th, right? Euro CAD. And what I want to show you really quickly is what I just hinted on. If we know that supply and demand being aggressive buying, supply being aggressive selling, then this right here will be classified as supply. Would it not? Aggressive selling. It even goes and breaks some structure right here, some support, some support. It went and broke this structure, this little support right here. Broke right through it. All aggressive red candles. So yes, this is supply. It's not a trick question. This is definitely supply. But the thing about it is, right, if we go in here and try to mark it up like we do our setups, the last candle to the top, move it over, you have to see what price is telling you. If we know that a gap being attached to our zone is letting us know that everyone didn't get into the trade and that the price will come back, fill the gap, and then go in that direction. With there being no gap here, and I explain how there's not a gap, we don't know if price want to come back here at all, or even if it does, will it hold to go in your favor or be a reversal? It can go grab liquidity, right? Because the move can be exhausted. And the reason why I say that is because there is no gap. There is no gap. So if we look very closely, because you have to know the difference when there is a gap and when there isn't, so you're not getting caught in these regular supply and demands. If the move is the candle that broke the box, then it'll be this red one right here that I'm touching right now. It'll be this one that wicked all the way down here. That's the move, right? So if we're going off our saying, if the candle after the move doesn't pull back to the candle before the move, our box, then that's the gap. But look here, this is the second candle after the move, right? Really write that saying down and study it step by step, and it'll help you figure it out. The learning curve with that saying is crazy. That's what I came up with myself to help me understand this better. So just write that down and break it into parts and understand what I'm saying. This candle right here is the move, right? If the candle after the move, this one, doesn't pull back to the candle before the move, our box, the candle that created the move, then that's the gap. But this second candle after the move, it wicks back. Look, it wicks back up into the box. It wicks back up. It's not supposed to come back and touch, right? If you got that sentence wrote down, read it again. It's not supposed to come back and touch. So the fact that this one does is letting us know what? That everybody is already in the trade. Everybody's already in. There's no gap. It came down here, right? Went back up here, the next candle, and then broke. It's too late. That's what price is telling us. So you have to be able to understand what price is telling you. Now, I'm not saying when it comes back here, or even if it does, that not to get in or not to take it. I'm just saying, to me, and what I've back tested, there's a higher chance you're going to lose this type of setup. There's a higher chance you're going to lose this type of setup than this one, right? Look right here. This is the setup I would have been waiting on. This is the box I would have had drawn up with my alert sitting right on top to let me know when it touches. Why? Let's zoom in here so you can see the difference in these setups. Let's go back to that sentence. If the candle after the move, so the move is the candle that broke the box, so this one, if the candle after the move doesn't pull back to the candle before the move, the candle that created our demand or supply, right, that created the move. If it doesn't come back and touch our box, and this one doesn't, it doesn't even wick down, it just keeps going. So if it doesn't come back, then that is the gap. So if we going off of that sentence once again, then this is the gap, right? That's the gap. Where that arrow is pointing inside of the little small box on top, that's the gap. That's where I know price wants to come and fill, and you see that it does. So I'm knowing more information with there being a gap attached than there not being one. So let's just see what happens with this setup. Let's see. Obviously, the one with the gap is a winner. I'm letting you know that right now. The one with the gap is a winner. That's just how our strategy goes. So I hope you're paying attention. That's a winner. So you see it gets close. Let's delete this because this is what I really want you to get. You see it gets close to the zone. So with the previous setup, we already know rookies, people that can't control their emotions, undisciplined traders, people that might not make it that far in this game, it's getting in right here. Even though, hey, it's right there, it's not that far, I'm busy later, let me get in. Okay, we'll see. You know what I mean? It's bad habits. Not saying it won't win, but I'm saying it's bad habits. So the rest of us are waiting. No one's in right now. We're waiting and hoping it comes back. Let's see what happens. Okay, it fills and then it breaks below. So let's dip down to the 5 minute here and see. Let's see the entry candle. So not yet. There it is. So it won. You know what I mean? It won. So I'm not saying not to take it. Let's zoom back out here to the 15 minutes so we can see exactly what I'm saying. I'm not saying not to take this setup. Yes, this is a 15-minute supply setup. You can draw this box. It is aggressive selling. It breaks some structure, this support to the downside, comes in, fills the gap, and then it throws you in. So get in. But me personally, I'm not even marking this up. I'm not even looking at this. I would rather be looking at this demand that was down here, taking this buy to fill in some of these gaps that's within this supply. You feel what I'm saying? But I'm not taking this because the move can be exhausted because everybody's already won their money in this big, large sale. So it can come up and continue to go up because it grabs liquidity. So it's going to continue to go up. Or it can throw you in and you win, or it could be a fake out. Who knows? But it's too many ifs, ands, and maybes for me. I just don't like it. So I'd rather mark up my true, tested, and tried with a gap every day, all day. So thank you for tuning in. I'm Mr. Unorthodox. Keep thinking outside the box. Peace out.